Hello and welcome to an FXTimes daily market recap. I'm your fundamental market analyst, Nick Nassad. Today is Thursday, March 25th, 2010. Let's start with a look at the euro-dollar pair, which we saw hit a fresh 10-month low below the 1.33 level, but then managed to rebound somewhat in later European trading and during the New York session. We had the euro slide on the back of comments by a Chinese central banker that said Greece's sovereign debt problems were just the tip of the iceberg, and that the main concern today is now focused on Spain and Italy, other important nations within the eurozone that are on the periphery of the core economies of France and Germany. However, investors' concerns were allayed somewhat after the ECB President Trichet said that the bank will continue to accept bonds with ratings as low as BBB minus as collateral next year, although it won't lend as much against lower rated papers against ultra-safe AAA rated bonds like Germany's. His announcements provide a reassurance to holders of Greek government debt, which could have been rendered unacceptable as collateral at the ECB if the bank had, as planned, raised the minimal acceptable credit rating back to where it had been before the global financial crisis. So that gave the euro a bit of a lift. We continue to monitor the ongoing saga of what will happen in terms of a bailout for Greece. At this point, though, it seems likely that the IMF will have a pretty substantial involvement in any package, as that has been the preferred outcome by the Germany, and it seems that they're convincing more members of a bigger role for the IMF. There was some expectation that perhaps a deal could be reached even as early as today. The more European the deal, the better it would be for the euro, while the larger the IMF role, the worse it would be. As we make this video around 12 noon, we are seeing some risk appetite in terms of commodities in terms of equities in the U.S., and we're seeing that the euro is rising, breaking above its intraday high around this time. Switching to the euro-yen pair, we see a second day of rallies for the euro as we moved above yesterday's resistance around 123, and by noon we were testing the 123.90 area. Zooming this pair out to show a little more price data, we see that we now perhaps approach again the 125 level, which we had acted as strong resistance in the middle of March. We had a bit of a double top here, and if we plot a Fibonacci retracement of our most recent downswing, we see that yesterday's resistance came at around the 50% level, but we moved above that, and we even pushed above the 61.8% level around noon New York trading. So the euro is definitely seeing a bit of a bounce, while the yen is rather weak against all of its major rivals. Here's a look at the dollar-yen pair, and we had a very strong surge in the dollar as we pushed above the 91 level in yesterday's session, following a small correction, retracement to the 91.75 level overnight. We have again seen greenback strength at the expense of the yen. The weakness in the yen and some positive equity markets around the globe, or especially in Europe and in the US, helped the Aussie yen pair to rally as we had pushed above the 83.50 level in yesterday's session. And after consolidating a little bit prior to the Asian session, and during the Asian session, we bounced up off that resistance now as support, and we fueled gains all the way to the 84.50 level. In the Aussie dollar pair, we were able to, after hitting a low around 0.9060, the Aussie has retraced some of its losses that we saw in yesterday's session. And if we plot a Fibonacci retracement here of the most recent swing, we see that our resistance came at around the 50% level. If there is some resolution to the Eurozone Greece crisis, then it could help to undo a lot of the risk aversion that has been fueling gains in the greenback, and as a result, harming higher yielding and growth linked and commodity linked currencies like the Australian dollar. We saw a pretty strong move in the New Zealand dollar US dollar pair as we had found support around 0.70, which had been our low for this week, and we actually pushed to an intra-week high at 71 in today's session. We had a rather positive GDP report from New Zealand as it came in with as it matched expectations of a 0.8% increase in GDP during the fourth quarter. Just to round out our commodity currencies, here we're looking at the US dollar Canadian dollar pair, and in yesterday's session, due to the risk aversion, we did have the greenback gaining all the way to the 1.0270 level, which pushed us above this resistance that we had broken down through in this 1.0 1.22 level, which had acted as support prior to being broken in March 11th, and then had acted as resistance earlier this week. But we were unable to reach the 1.0320 level, which was our resistance back before we made that move below this 1.22 level. We can draw a trend line connecting these highs, and after being drawn, we could see that that did match up with some of our resistance from yesterday's session. Yesterday, we had the Bank of Canada governor give a speech, and he did not seek to dispel mounting expectations that the bank could be raising rates again soon, possibly before the end of its conditional commitment to keep them steady at the record low level of 0.25% until the end of the second quarter. However, with pretty good Canadian data on the employment and housing and growth front, it seems that some of that higher interest rates by the Bank of Canada have been priced in somewhat into the market. So while we did have some gains by the greenback from the middle of March till yesterday's session, that is more likely a part of the risk aversion we had seen around the Greece situation and not necessarily anything to knock the Canadian dollar. In our final currency pair, the pound dollar had a pretty volatile session as we rose from support around 1.4850 to hit a high around 1.50 in the wake of a rather positive retail sales report, at least for the month of February. But right after we touched 1.50, there was a pretty swift rejection, and during New York trading, we saw the pound give up its earlier gains, retesting its lows around below 1.49. So this level here around 1.4850 is important to watch, as it was our low earlier in the month, and the move below it could open up the pound to further declines. In that retail sales report from the UK, we saw that sales were up 2.1% on the month in February, which was a strong rebound following a rather sharp 3% decrease during January. On the year, sales were 5.4% higher. Both of those readings did beat expectations rather strongly. In the US, meanwhile, we had jobless claims data for the week ending March 20th, and we saw claims drop by 14,000 to 442,000. It's the fourth week in a row that claims have declined, and except for 1 week in February, it's the lowest jobless claims have been since this downswing started in the beginning of April of 2009. Claims below 450,000 should be consistent with some actual job growth in the economy, so we'll see how the non-farm payroll report for March reads in next Friday. The 4-week moving average has also turned back downward, which is a good sign for the labor market. Now let's take a look at the upcoming fundamental releases that will end the week. Tonight, New Zealand posts data on its trade balance, Australia releases information on its leading indicators, and Japan posts consumer prices. Overnight, we have a final version of fourth quarter business investment from the UK. Tomorrow in the US, we're going to get the fourth quarter final version of US GDP, as well as the UMich Consumer Confidence Report, the final version for March. And that will do it for today's broadcast. For more news, videos, and analysis, please visit FXTimes.com. I want to thank you for watching and wish you good trading.